Record. All right, so we're recording. So welcome to the Forex League free public webinar. Like I said, we're going to go over all the questions listed on the screen right now. We're going to try to get through them as quickly as possible. I think in previous webinars, we've done like 15 questions. The numbers are all messed up on this, but I believe this is right around 15, right around 15, 16. So we're going to try to get this done in the next hour. And yeah, we're gonna try to just have some fun with it too as well. So
Absolutely.
we can get started. For you guys that are just joining that don't know, that I'm Saved by FX on Instagram, Nick Dark FX over there. Nick's over in the office. Unfortunately, right now, with everything going on, I haven't been over there too much, but I think things are starting to open up a little bit,
Definitely.
for us, which is definitely really cool. So we'll see what's up with that. I'm just gonna close my window.
All right, so let's
Cool.
kick off on question one.
Yeah, we can get started. Let's go with question one. What confirmation should be used in entering and exiting a trade? So we can get started with that one. Pretty good question there. There are tons of confirmations that you can use. It's a very vague kind of question. Obviously there are things that I look for when entering trades. There's things that Nick look for. Maybe we can just I'll say a few that I look for, then you could say a few you look for.
Yeah, absolutely.
For me, it all comes down to what time frame I identify on the trend on. So I'll look on the daily, the 4 hour. Once I see a setup on that time frame, or I see an area where I'm looking to trade, I always get in on trades on the 1 hour and the 30-minute. So very defined, area where I'm looking for entries. Also depending on the pair. So on that 30-minute and 1 hour, in most cases, what I will look for is a combination of bearish or bullish signal combined with the moving averages crossing. Why is that? That's because that is, for me, forming then a major area of structure in that lower time frame trend. So as soon as those moving averages are crossing, that's telling me that momentum is shifting, from either being very bullish or very bearish. It's very bullish or bearish. And that is kind of solidifying that area as a zone. And then I can put my stops comfortably, above or below that structure level, and say that if this level breaks of support or resistance, that I know that I'm either too early, on this trend, or too late, whatever. And I don't want to be in on a trade, right? I don't know why it's echoing a little bit. Can you hear me all right?
Okay. Yeah, you seem fine.
Yeah, I don't know. It's like you're lagging a little bit. But yeah, so those are my confirmations. You can go through some of yours if you want.
Yeah, so basically, but it's like a domino effect for me. Again, we always start on top-down analysis. Every week we'll start off on the daily time frame or 4 hour, where I'll be looking for key zones, and I'll be either looking for rejection of a key zone, or like an engulfing on a higher time frame, or exhaustion on a higher time frame, something that'll tell me I can then drop to a lower time frame, and then I'll start looking for confirmations on those time frames. So like, let's say I see a daily engulfing, I'll drop to a 4 hour, I'll start looking for a 4 hour transition. I want to see, if I'm looking for a short, I'm looking for 4 hour support levels to break. Then I want to see a retest. As that retest is happening, that's reason enough to drop down to a 1 hour or 30-minute. And then I'll be looking for, engulfings, evening stars, moving average crossovers, more exhaustion, other bearish variations that I would then enter on. So it's pretty much a domino effect. I'm always just waiting for a more significant setup on a higher time frame, and then working my way down, all the way down to our execution time frames.
All right, cool. So let's get into number two. Are indicators really that important? And if so, why? And what indicators are the most important and easiest to use? We're going to answer that just based on the indicators that we use. We only use the moving averages. I would say that, whether indicators are important or not, they're important if they're a part of your strategy. You want to select an indicator that you fully do understand. That's obviously really important. One that you've tested, that you see as, making sense for the strategy that you're using. And, there's a ton of indicators. I know Nick's worked with more indicators than I have. I've really only worked with the moving averages and RSI. I've used RSI briefly, but then I just pretty much shelved it because I just didn't see it as being, I saw it as always being kind of late, you know, for me whenever I was looking for execution. But I didn't stick with it long enough. I think, you know, moving averages are important. You know, if you understand how to use them, I would definitely say to give some a chance. You know, I always stuck with moving averages, and over time, you know, they became a big part of my strategy, you know, for the reason as they help me get entries, they help me identify the trend, you know, and that's just because I've worked to kind of understand it more and more. So, you know, moving averages, I feel like might be the easiest to use. Maybe you can touch on that a little bit.
Yeah, so the whole thing with indicators is there's no one strategy to trade Forex, right? There's multiple strategies out there. Some are better than others, but you know there are multiple ones that work. Some include indicators, some don't. You know, I've used pretty much every indicator in the book. I personally just don't like them, other than moving averages. I prefer price action trend trading much better than like heavy indicator usage. Now there are a lot of traders that do that, but it all comes down to what works for you. If you like using harmonics and you've had a good success rate with harmonics and you've stuck with it for a few years, whatever, continue to do that. Don't just change because one trader says, oh, harmonics suck. Like, I mean, you can make anything work for you. It's just it's all about how you apply it. Now, if you're using one indicator and taking trade just based on one indicator, that's not a real strategy. That's you trying to find an easy way out. So like you have to take every indicator kind of with like a grain of salt.
Oh, damn, your connection just waved. So I think we just lost Nick real quick. Let's see if he comes back. Can you guys hear me all right? Just drop in the chat if you can.
Because they all have their purposes.
Yo, Nick, we're losing you here. Your connection's really bad. Yeah, you can hear me. So yeah, like Nick's saying with the indicators, it really just comes down to working with them long enough.
All right, hold on one second.
Obviously, yeah, your connection's fucked. Obviously, learning from somebody who's demonstrating that they know how to use them. There's a lot of places to learn different indicators on YouTube, everywhere. Obviously, we teach only the moving averages. That's, the indicators that we use. So again, you want to learn from somebody who's teaching them correctly, and then you want to test them. You want to test McDonald's Wi-Fi. You want to test them, continuously so that you can start to recognize patterns, within them. And then like Nick was touching on, you want to combine those with other strategies or other confirmations, support and resistance, supply and demand, price action confirmation, trend lines, everything like that, so that you can actually get give yourself like a legitimate edge, in the market. So our indicators are definitely important. Definitely important.
Is this better?
Yeah, it's like better, and then it's like cutting out a little bit, and we could just give it another chance.
Yeah.
Let's coronavirus. Let's go to number 3. I know these numbers are all messed up, but how to open positions without blowing an account.
Well, that's pretty simple. Use a specific consistent amount of risk, per trade. You should be risking 1 to 2% per trade. You shouldn't be over leveraging half the account. That's just, you have to be consistent. You have to have some sort of risk management. If you're blowing an account every other trade, you obviously something's not right.
Yeah, definitely. It comes down to understanding margin as well. Understanding when you open a position, what leverage do you have on your account? If it's 1 to 100, 1 to 500, how much room do you have before you're going to get margin called? If you use unregulated, I would always just go in 1 to 500. It'll give you, room to put on higher lot sizes without getting margin called. There's a difference between getting margin called and blowing your account. Obviously, blowing your account is you lose all the money. Getting margin called is that you just run out of room, run out of margin in the position, and then you get, they don't allow you to continue to hold the trade anymore. So you get margin called. But basically, how to open the blowing account, use, the position size calculator. I'll drop it in the chat, really quickly. Boom. Here, I'll drop
and
it.
Also,
buddy.
I'm going to recommend an app. You want to use this app as well. And again, you should be risking under 2% per trade. Anything more is kind of a greedy outlook, you know, unless it's a small, like super small account, whatever. But if it's like your main trading account, you should probably only be trading 1 to 2% consistently. You shouldn't have a trade where I'm placing 3% here, another trade where I'm dropping 10%, another trade over here where I'm dropping 20%. 20%. It just doesn't make sense, you know, from a, you know, risk management standpoint. It doesn't make any sense. All right, so couldn't find it. It's on the App Store. You couldn't find it on Play Store. Dang.
So, yeah, I don't know if it's the news on. I think it's only on the App Store. It's not on the Play Store, I don't think.
All right.
Yo, Nick, you know what you might want to do? You should just call into the session.
What would really that bad?
Yeah, your
Ridiculous.
Wi-Fi's beat, realistically.
All right. I'll try and mute myself then. Hold
Or
on.
no, you could just call in on your phone and like, then you'll be fine.
Yeah.
And you just keep your video on. I just texted you the number to call in on.
All right. There we
You
go.
just call in and then put the meeting ID in. So let's go on to number 4 here. The next one. What would have improved your journey if you knew it in the first few years? So for me, what leverage you use? I still use 1 to 500. If you use regulated brokers, it's going to be 1 to 100. Everything, you know, the leverage is going to be under 1 to 100, 1 to 50, 1 to whatever. You know, there's definitely benefits to doing that. Is your money is definitely, you know, well protected in those regulated accounts. The market is going to be there's going to be no manipulation to price. You know, you're going to be getting that true price. There's going to be no weird, you know, manipulative spikes or anything that you might get with unregulated brokers, stuff like that. What would you improve your journey if you knew in the first few years? So what I would improve for myself is just starting to get to the point of back testing as soon as possible. Also, it's like a blessing and a curse. Let me see. It's like a blessing and a curse for me. I bought a course from day one. I didn't fuck around and try to learn on my own. Here, let's see. Oh, we got. What's up?
Check.
Yeah, I think you're good now.
You hear me okay?
Yeah, we hear you okay.
Okay.
Yeah, so I didn't fuck around and try to learn on my own too much. You know, I know a lot of people do that, which is fine. I just was like, okay, I want to learn from a mentor. I want to, you know, gain access to somebody who knows what they're doing and that's going to help me. I mean, the mentor that I found didn't teach me everything that I needed to know. And I think my biggest mistake is I think I should have joined like 2 different groups or like 1 to 2 or 3 different groups and invested in a couple groups. And then I could have picked from each of them, like, you know, some positives and negatives, you know, learn different things from them based on who was like the most professional and whatnot. You know, the group that I learned from definitely taught me an edge, but there was a lot of things missing when it came to risk management, account management, you know, position size calculating, you know, all of that is truly going to make you, you know, a professional trader. So there's a lot of limitations with that, which I think drew out my learning process, you know, but at the same time, I do feel pretty confident in what I've learned thus far. You know, one thing I would just change is one thing that I would do if I was you guys is I would not worry about like having $1,000 account, having a $5,000 account, having a $10,000 account. I would literally just have like a $200, you know, depending on what leverage you do get, you need like a 1 to 500 to do this. But I would just have like a $200 at the minimum, or like a $500 account that you trade live with, so that you're always trading live. I would risk 1 to 2% on that account only. Like I would definitely stay under 2% on the account, and then I would always trade that, and I would have that linked to an FX book, that one account, like from the beginning, like the whole duration. You can really track, you know, your growth and like how well you're doing and the gains that you're making and everything. And then I would also have a demo account that ran alongside that. I know people that do this. Maybe have that demo account be like 50,000, whatever hypothetically the amount you want to get funded with through your own money or through someone else, and run the trades on both accounts. You know, manage them with that larger account, so you get used to, you know, looking at the numbers of a larger account. It's definitely pretty mind, you know, it's a mind game when you start to see 5 pips equals, $500, and everything like that. And that's tough to see. So once you start to get into trades and you're only maybe up 1% on the trade, but it's like $2,000, that's a pretty big ways from you being up 2% on a trade or 1% on a trade and you're only up $10, so the big thing when it comes to psychology of like just having like money. So, regardless, you want to move to the point where you're numb. We're all trying to work to the point where you're numb to that concept. But yeah, that's what I would do. Have that live account, have that demo account. We can go to the next one. Or Nick, what would you improve by your journey?
Well, I would like to find all right. So I learned on my own. I had to kind of dissect and pick from all these different resources, which really dragged out the process. I think if you could get into a community or a few communities, or if you can link up with somebody who's a professional as early on as possible, develop some good habits early on. That's definitely the quickest and most effective way to learn. Don't try and just tackle it on your own by watching bullshit strategies on YouTube. It's just going to hinder your process. So definitely find a community that offers value, or one that you can relate to, and or mentor it. Then definitely join with them. I wish I had access to that, because I got in way early before any of this really was mainstream stuff. So yeah, we can move to the next one. As a beginner, how many trades should you aim for in a day? So I always say 1 to 2 trades a day max, alongside trading 1 to 2 pairs only, because each pair moves slightly differently, right? It's all relative. So, you want to really learn a couple pairs first, and then get comfortable, build confidence with these pairs. And then essentially you'll just gain confidence in trading. Along the way, you'll start seeing patterns and setups that, you recognize, that you feel confident in, that you've made money on, or you've learned from. And then, then you can start making, a couple trades a day, and then you could gradually push that as you see more success, but I would definitely say in the very beginning, 1 to 2 trades a day, absolute max.
Yeah, I would definitely stick to like 1 pair, maybe 2 pairs at the beginning. The reason why you don't stick to just one is because you still don't know which pair you kind of like. So try out a few different ones. And then once you kind of figure that out, get it down to maybe 1 or 2 pairs. Then, per day, maybe I wouldn't even say like how many trades should you aim for in a day. I would just make it try to risk less than 5% of your account per day. Like, don't risk more than 5% of the account. Obviously if you're trading like 20 trade, whatever, it depends. Like this, I don't know if we're talking about scalping or intraday or swing trading. If you're just going by percentage wise, trade under 5%. Trade under 5% on the account, whatever that adds up to be. Use the position size calculator, then you'll be fine. So let's go to the next one. How to avoid scammers. Someone had a big question on this. I feel like it's fairly obvious who's a scammer. One thing that I'll say is if they have a YouTube and their YouTube channel has no videos on trading, like on the charts, like no technical analysis videos, then they're most likely just marketing to you. They're just marketing lifestyle. You know what I'm saying? Yeah. Like they might have a decent course, but at the end of the day, they're not probably the person you want to be learning from day in and day out. They're not performing TA. They're not bettering their craft in themselves. They're just talking about bettering their craft themselves. They're selling it well. So that's a way to, avoid scammers. Just literally look at their profile. If their profile is filled with nothing but pictures and no TA, and then if you look at their YouTube and there's no TA either, then they're most likely not someone that you want to be learning from, because they don't provide any value.
Exactly. Right? That's the key point right there. That's the key word. It's value. Scammers are not going to provide value because they physically can't. Like, they don't have the skill set. They're not real traders. They're just trying to take your money with nothing in exchange. So that means they won't be able to offer any value, really. To avoid scamming, find communities that offer the most value. If someone's offering something for free, much like Angela and I do, we give so much out for free. That's a really good sign, because you're already learning. You haven't invested anything other than time, and we're giving you pretty much free educational material. That's pretty much the first green light as to these guys are real, versus this guy who's saying you need to give me $700 for me to even talk to you. There's a big difference there. But a lot of people will skew that lifestyle marketing scheme, and people fall for it. So value over anything else. That's really the one thing you want to look for. All right, let's keep going here.
How to avoid scammers. How do you resist the urge to revenge trade? You can start off with that.
Yeah, so you can, like, early on it's going to be harder to not revenge trade. So in this case, you want to set rules for yourself. This is why I said, limit your trades per day. Because if I lose a trade, let's say I limit myself to 2 trades a day, right? I win one, I lose one, and I want to make that money back. By that rule, if I'm sticking to my rules, I can't trade anymore. So therefore, I can't revenge trade. So you resist the urge by having your rules. Discipline, experience, confidence, all that will help you avoid revenge trading. This is actually a pretty interesting question because we cover this in week 5 in our psychology section, and this is literally a 10-minute segment in that week just on revenge trading. So
yeah, definitely. When it comes to revenge, if you're letting any sort of emotions dictate your trades, and it's difficult because there's a difference between letting intuition lead you into a position and letting emotion dictate you, like literally revenge trading. I would say this: if you're about to take a trade, a good thing to do for you, especially beginners, is like build up on that one pair, like a bunch of screenshots of entries that you've taken in a back test, you've taken live. And, if you're really trying to work through the whole psychology aspect of trading, and when you're about to take a trade, if you feel like it's a revenge trade, like you kind of know that, take a screenshot and just sift through, like maybe just save 10 entries. Sift through those 10 entries, and if it doesn't look like those entries at all, then maybe just don't trade, like don't take that trade, realistically. It doesn't look like any of the entries you've tested, anything that you've got experience with, you're probably taking that trade, either based on an emotion or based on something that you haven't learned yet, something that you don't, recognize, which is going to lead you into a position that you're not sure of. And then, that uncertainty is going to cause you to make, either to hope and to just hold, whatever, which is not a situation you want to be in. So, as soon as I get into an area where I don't know where I'm at, like say I'm holding it, and I've been getting into this more recently with positions that I've been in, I've been in profit in. So I've been in, I'm up 1% or 2%, and all of a sudden I'm at these like support levels, and I'm starting to, think like, okay, we're very overextended in the market. Like, do I just hold? And as soon as I start asking myself, like, do I just hold for no reason? That's when I'm like, okay, I really need to exit because I don't have a plan. I don't have a strategy around that moment for me to, correctly make a decision based on probability. So I have to be out. So yeah, definitely, resist revenge trading just through preparation. What is the best lot size to use depending on your capital? Again, I dropped the link in the chat earlier. Best lot size to use is just use the position size calculator. Risk 1%, 2% of your account, 3%. If the goal for you is to really become a professional trader, then the goal for you should be to manage 50,000, 100,000, 250,000, a lot of money, 500,000, and eventually more than that. You realistically, if your goal is to actually become a trader, and then the 1% when you're trading 100,000, all of a sudden that's $1,000 on a trade. You know what I'm saying, that you make, or
minimum on a 1-to-1,
$2,000, right? So and obviously you're making 5% a month, all of a sudden, that's $5,000. So this is what professional traders do. They trade 1%, they trade 2%. Talk about this in every book. You're never going to blow your account doing that. You'll never blow the account. Okay. If anything, if you lose 5 trades in a row and you're down 10% on the account, then you can maybe just take a break, take a step back. For you people that are still employed, maybe add some money to the account to level it out, whatever.
Yep.
At that point, if you're going down, if you're in like a 15% drawdown on a huge account, then your edge sucks, and you're not, you're either over risking on trades or whatever. You're not.
Or revenge trading.
You're not ready to be managing that amount of money. How do we go about start earning?
But yeah, the lot size is dependent on your stop loss. It's not necessarily the lot size that matters. It's the percent risk that you're using per trade.
You're not the people to be asking about taxes. You should just ask an accountant about taxes. I know that it's taxed similar to capital gains. But you literally, all you need to do is you can go on your broker, print out your order sheet from the year, all the positions that you've taken, your tax forms on there, and you can plug them into TurboTax, plug them into with an account. Or there are things that I'm looking into now that are actually very interesting when it comes to forming LLCs and protecting your losses against the LLC. There's actually somebody I'm talking right now that's like helping me become more educated on that. So that aspect is definitely interesting, but taxes, definitely trust somebody, professional. Let's go to the next one. How much money do I actually need to start trading with? So this is what I said. Realistically, it comes down to whatever money you're going to put into the charts, you should put into some sort of education, whether that's from anywhere, get involved with some sort of group and I say a group because that way you can ask questions, or you can go back, you can look at, previous conversations, look at previous files, uploads that they have, and it will just shorten the learning curve by so much. You can immerse yourself in the group as opposed to learning from this YouTube video, that YouTube video, this YouTube video, all these different people, and then try to bring those things together. It's a lot of energy that you're wasting doing that. So yeah, how much money do I actually need? Enough to invest in some group, however much money that is. And then, like I said, your first account should be no more than like $200, like $500, whatever, because you got to see if you can perform with that money. If you can perform with that money, then you can start to scale it up to perform with more money. You don't need to prove to yourself on a $5,000 account. Prove to yourself first on a $200 account. And yeah, so start small but think big. You got anything to add? I think we might have lost Nick again.
On the phone.
Yeah, I think your phone's waking up a little bit too.
Oh my goodness.
Okay, you're in like a dead zone right now. Let's see. How much money? How to be mentally fit for trading. How to train our bodies to feel no emotion in trading. I messed around in the group chat and said take drugs. Don't take drugs. It's not gonna help you. How to be mentally fit for trading. It comes down to, for my opinion, is everything. What you eat. Exercise. Who you talk to. Where your environment, where you live. Those things all come into play. You are trading based on your laptop. You're not going into an office. You're not going into an environment that's catered to create the energy needed to perform and to do work. So if your house, you got to make sure your house is an environment where you're not going to get distracted, all the time. You do have privacy. You do have some sort of office or whatever. That's definitely important. So have that environment set in place, for yourself. If you're having trouble maintaining trades, you're getting anxiety, you're not able to sleep at night, stuff like that. Definitely, you want to try to eat as healthy as possible. You want to, there's a lot of things that I personally do to try to maintain very consistent energy level. You want to try to keep your energy level very consistent. You don't want to be up and down, up and down, up and down, because that's not going to make you available to take positions when they're there, because positions can be there at really any time, throughout the day. So you want to try to be as consistent as possible, with your energy level throughout the day. And then train your body. So there's no way to train your body to feel no emotions. You're humans. You know what I'm saying? If you're talking about training your body to feel no emotion, then you should just, that's like algo. You have like an algo trade for you. Like AI.
Right.
The only way to have no emotion is to have better preparation, so that when you're in positions, you don't, you know where you are and you know what you're looking for, and that you don't get, scared or have fear or whatever.
Exactly. You got to build confidence in. So yeah, that's one way to, battle emotion. In the beginning, you may be worried because you don't really know what you're doing. But as you, practice more, as you gain confidence in your trading, some of those emotions won't be as strong. So that's another way to do it. Just practice, practice, practice.
Yep. So let's go to the next one. Which candle shows more rejection? A candle with a small body with a large wick, or a huge body, small wick? You could start off with that one.
So, okay, so it sounds like the first one is explaining a spinning top, which is a main rejection candle. It shows a lot of indecision, which is also the second candle in a key reversal, evening star or morning star. So typically that will show the most rejection. However, if you do see, you're at significant resistance and then a giant, engulfing candle happens, that's a lot of rejection as well. But normally, a small candle body with a large wick is the first sign of a reversal. It's definitely a key setup that we look for.
Yeah, so for me, a candle with a small body with a large wick obviously depends on which time frame that we're talking about. Regardless of if I'm on the higher time frames, if I'm the daily and 4 hour and there's a large wick, then I will go down to a lower time frame and I will see the bodies of those candles and see how they make up that wick. Are there breaks of structure in there or whatnot? This also is just, is it a doji? What kind of candle is it? Is it a spinning top? Just based on like candlestick analysis, what is that telling us? Most likely signs of reversal. Huge body with a small wick, that just means there's a lot more volume filling out that area, filling out that designated amount of time, and most likely that's telling you that the momentum is still in favor of whichever direction that candle is closing at. Which I would recommend for watching entries and candlesticks. Yeah, time frames, and I'll look candlestick analysis. You can look at here. I'm gonna pull up the trading plan. So candlestick analysis, you can look at the weekly time frame, daily time frame, H4 time frame. That's the main time frames that I look for candlestick analysis. And then which time frames for entries, like I said before, just the 1 hour and 30 minutes. 1 hour and 30 minute. So we have this little, I don't want to give away too much inside of our trading plan, but I will show you guys what we have inside here on our trading plan. So we got, daily, 4 hour, 1 hour time frame, candlestick analysis, right here, like I said, some other technical analysis on here, and then it gets down 30 minute, and everything like that. So this is something that we just have, inside of our trading plan that all the members, do get. So yeah, those are what we're looking for there. What should we do if the two pairs we trade don't have anything going on, such as them entering consolidation? It's much of the same. If you want to trade in trending markets, depends what type of trader, you're waiting for a swing trade, waiting for an intraday trade, waiting to scalp. If those pairs are entering into consolidation, maybe that's a good time for you to go ahead and, like we just talked about, getting mentally fit. Maybe you go, do some exercise, do some reading, do some other things to help improve your concentration. At the end of the day, you want to just work on your ability to be as concentrated as possible as what you're doing for long amounts of extended periods of time. You want to be able to do that. So do activities that can help, improve that for you. If it's consolidating, maybe it's a good time to step away and, take a look at something else.
Yeah, exactly. I mean, you can analyze a bunch of pairs. You can analyze like, two, maybe even have a bonus one just that you're learning on the side. But, just be aware of what's going on. Don't be taking, trades because there's nothing happening. Just be aware that it's consolidating and that you're then going to be patient, and then you're going to wait for a setup to come to you. Also, real quick, something's wrong with your screen, kind of. It's like the trading plan kind of messed up the questions.
Also, don't do this. Don't
There we go.
I'm just gonna refresh the screen. So don't wait in your pairs are consolidating, whatever, and then don't go and start back testing and looking for entry, reasons to enter, on testing some sort of strategy, and then go back onto the live chart and all of a sudden you're like, wait, there's don't look for an entry. You know what I'm saying? Wait for the entry. Wait for the entry
Right.
that you look for. So one thing that I'll say is when you're testing, don't trade. So when you're back testing, especially as a beginner or you're just struggling, don't trade, just test. And And then when you're going to start to trade, you know, get ready. Like tell your, okay, I'm live trading now. Like I'm not testing. I'm going to focus on live trading. And then you get started. Like, okay, live trading has started now. Like, you know, make it an event, make it a thing for you. Separate the two of them, because when you're testing, you should be trying to find new ways to enter, improve your edge, improve your strategy. You're trying to learn. But then when you're live trading, when you're executing, you just want to be performing based on rules. You don't want to be trying new shit. You know, you just want to say, I've tested this already, and then this is how I'm going to move, you know, with that in the market. So that being said, let's move on. When you're in a trade and you go and draw down, do you let it run or do you cut the trade? You can go ahead.
Yeah. When you're in a trade and you go into a drawdown, do you let it run? Okay, so normally I set that stop loss for a specific reason. Let's say I'm trying to short. My stop loss will be outside of resistance in an area where if price action had reached, the trend would then be, you know, transitioning into a bullish trend. So I choose my stop loss for a reason, and I'm very confident even when I'm in a drawdown. I usually don't sweat it at all. However, if you do see that there is, you know, significant lower time frame structure breaking with good volume, you know, you could exit on that and kind of cut your loss to minimize the loss. If you do see that there's, you know, significant setups going against your trade, and that are also breaking those micro levels, you could do that, but I typically will let my stop loss be hit because, again, I choose my stop loss based on a significant level. You know, and then up until that point, you know, the trade is still valid. You know, I just had entered at a point where I saw that there was a setup like an engulfing, evening star, MA cross plus resistance, something like that. You know, I entered for a reason, I set my stop loss for a reason, and I set my take profit level for a reason. So, you know, normally I'll just let it run.
Yeah, for me, you know, I do, you know, much of the same to Nick is, you know, when I enter a trade, say I'm in a trade in the first few hours. It's only like, so most of my trades will last anywhere from 12 hours to like 3 days, right? I know that. So if I'm going to trade for the first 8 hours, then within those 8 hours, most likely there will not be some sort of major level of structure that will form to like a lower high or something like that to then become important for me to say if this level breaks that I will exit the trade. I am more just based on my entry. I'm more just, and based on how I know how long my trades normally play out, I'm more just waiting to see my idea, you know, how it plays out. Now, after those first 12 hours, you know, there is an opportunity potentially for some structure to form. You know, after one day, maybe there is a structure level that forms, you know, a lower high or a higher low. And then if that breaks, then I will look to cut my losses like on the 1 hour, you know, on the 1 hour time frame. If that breaks, I'll say, okay, it's time for me to, you know, get out of the position I'm in. So it really, you know, comes down to this. Don't give your trades room to breathe. Give your trades room to make shit happen. You know what I'm saying? Like a lot of times we've entered signals and like they've gone into drawdown in the first 5 minutes. Just because you don't have a sniper entry every time doesn't mean it's a bad trade.
Right.
And because you're risking, because you're not, you know, I think this also gets very misconstrued because there are people educating other people and telling them to like risk their whole account on one trade, like over leverage. And then they're like, cut your losses. And you're literally so fucked already because you're not giving yourself a chance to even make a next trade. You're literally having a $1,000 account and you're like, I'm about to flip this to $8,000 on one trade. Like, don't get me wrong. And I've gone over this in videos. When you have $1,000 you can wipe your ass with like a lot of these, you know, gurus have. When you have $1,000 that doesn't mean anything to you, there's nothing wrong with trying to do an account flip. It's just a style. It's a different way to approach, you know, growing the account. For people that want to become professional traders, that want to manage large amounts of money, no one in their right mind is trying to account flip $1 million. You know, like you're risking 2%, at the most, adding on to that position 3%, you know, 4%, whatever, you know, and you're managing your money. You know, you're not trying to flip $1 million and you're not like over leveraging and then cutting your losses at 500,000. Like think of it in terms of that much money makes no sense. You know,
absolutely not.
Makes absolutely no sense. And that's how you have to manage it. Because realistically, like if you want to get to that level, you got to treat the small amount of money with the same amount of care as that larger amount of money. the same way when you're starting small with anything, you know, the level of attention to detail has to be there, you know, as you have those longer term goals in mind.
Very true.
Yeah.
Very
So, you know, when it comes to going into drawdown, whatever, you know, like I just explained, I do have a method to my madness. You know, over the first few hours, I'll let things play out, let the trade breathe. I'm not moving my stops to zero. When it does get to 1-to-1, you know, that's when I'll evaluate whatever move my stops or for structure level forms. You know, so that's just me.
Yep, very true. And all right, so let's move on to the next one. How do you manage your biases when you trade? So, you know, through previous analysis, you guys have noticed that I've kind of marked out all the trends. Your bias is not going to, on the higher time frames, is not going to change. Like your weekly trend is not going to change in the matter of hours. Your daily trend isn't even going to change in the matter of hours. You know, on the micro time frames, you know, you could see, you know, you could see a daily bearish trend, and then you could see, you know, a 4-hour short-term bullish trend, you know, and then you're looking for transitions on that 4-hour time frame or that 1 hour, you know. You're not necessarily, your bias isn't changing that dramatically, you know, and if it is, if your bias is changing that dramatically, there's something wrong with your analysis. So that's why we always recommend doing top down, start on the higher time frames, work your way down.
Yep. Top down analysis. Also, one of the things that Nick does, and you'll see this in, you know, as we go into the market blitz in the next session, he'll even write on his screen monthly time frame bearish, weekly time frame bearish, daily time frame bullish, 4-hour time frame bullish. You could even do that, you know, label each time frame. You can go like that. For me, I will say I am basing structure for the most part, you know, my trend, you know, is it an uptrend or a downtrend? Is my bias bullish or bearish? Because of the fact that I do swing trade, that I do look to just find, you know, positions based on the overall trend. I'll look on the daily and the 4-hour. You know, those are where my biases in the weekly. That's where my biases are basically, you know, they're put. That's where my biases are in.
Yep.
So let's go on. How can people go from beginner level to intermediate to professional? I thought this was, you know, a pretty good question to keep on here. I can start off.
Yeah.
I'll say, you know, beginner level for you, if you know nothing about Forex, I'll tell you this. Don't spend all your time on baby picks. I've gotten so many people asking me or like saying, I'm going to buy a course when I get through baby picks for the 10th time. I'm going to buy a course. Like, you don't need to win an argument with somebody about Forex. You don't need to win an argument. All you need to do is have a strategy based on you have to perform on the chart. You have to perform on the chart. If you have an edge on the chart, it don't matter if you get in an argument with somebody about what anything is realistically. You know, all you need to do is be able to perform and show them some sort of P&L, you know, your profits and losses. I do recommend going through baby picks one time. Get that base level education. You know, that's fine. But don't live and die by the definitions on there. You know what I'm saying? That's why we made the trading plan. You know, you want to have things consolidated, like things that you need. You know, I gotta understand. You know, from the level me and Nick are at now, we do kind of forget. You gotta learn all the candles. You know, you gotta, you know, learn all the different kinds of confirmations and Fibonacci, like all these. You know, all these different things, like just definitions and background, like when do the sessions open, you know, all this stuff. You know, that's why, you know, I talk about this. I'm just going to go bring this up again. You know, that's why we did create this trading plan right here, is because we kind of wanted to just put everything in one place. This is just the table. Of, you know, obviously you want to know your strategy, risk management, candlesticks, you know, types of variations, major market hours, major market pairs, news sources, and then all the patterns. That's everything you need to know in a nutshell. Don't need anything more than that to get started. So as a beginner, these are the things that you want to study and get acquainted to, and then this will bring you to a point where to be intermediate, I would consider someone intermediate when they can make sense of like a top-down strategy, when they have some sort of strategy, and then they can start back testing, as in they can do a full chart breakdown, preparing for the week. I call this like being a market analyst. So you can analyze, you know, a chart, you can give a forecast, you can forecast an idea, and you know, or then you can start to make your way to know where entries are. And then obviously being a more professional level trader is you trade using risk management. Over the course of the month, you come out positive. Over the course of the few months, you come out positive. Over the course of the year, you come out positive. You know, you're having percentage gains. You're maintaining your trades with rules. You know, you're continuously learning, as in you're continuously trying to improve your analysis, your ability to forecast ideas. You know, you have certain pairs that you can recognize setups on over and over and over again, high probability setups. All those things come with actually being professional. At the end of the day, you're comfortable in the market.
Yeah. So yeah, he pretty much covered everything, but also, you know, it comes down to, we can teach you a strategy, but what you do with that strategy and how much you practice it and learn it, you know, it depends on, you know, your progress and how fast you'll progress to the next level. So it's really one of those things where it's what you put in is what you get out. And if you're going to, you know, half-ass it and expect, you know, the first strategy you learn or your first time on the chart to, you know, start making money, it's obviously not going to work out that well. So, you know, definitely what you put in is what you get out as well. All right, so let's keep going. How fast should I put the stop loss on break even? So this, you know, it also depends on the scenario. Every trade's different, but typically, you know, once you reach 1-to-1, you know, you don't want to let a winning trade turn into a losing trade. So, you know, and a lot of the time it does make sense to move your stop loss to break even so that it's then a risk-free trade, right? And that's, you know, typically once you're well enough in profit, you know,
Yeah,
1-to-1.
A couple things that I do is I'll use my Fibonacci tool, and when that next leg down or that next leg up, when the 618 is above my entry, that's when I'll move my stops to break even, because then I have the 38.2 and the 618, you know, in play for it to potentially respect, for me, for it to find that next support level to then get, you know, to a new higher high or new lower low.
Right. Okay, so how many currency pairs is the best? Was this to keep on my list for the following week? Okay, so this also depends on, you know, how advanced of a trader you are. You know, if you're at the intermediate professional level, obviously you can have as many pairs as you want on your watch list. You know how to balance it. You're not overwhelmed. But if you are more of a beginner, you know, less is more in the scenario. You're still learning. You know, you're not trying to make $1 million in the next week. You know, you're still a beginner. Your first goal is to master the skill set. So, you know, 2 to 3. It's good to analyze a couple, and then actually only trade 1 or 2. I would say, while you're still learning in the beginning.
Yeah, I'll even bring up real quick my watch list. You know, right here, obviously I've got one. This is just the major pairs that I'm watching, 3 to 5 pairs right here. Like Nick said, as a beginner, you know, don't crowd your watch list with everything. You know, keep on like 2 to 3 pairs, you know, and move with that, so you don't, you know, get overwhelmed or anything like that.
Right.
Then we got one. I live in NY area and work full time, 9 to 5. What's the best time for me to trade? You gotta understand what your trading style is before, you know, you really make these decisions. Like, you gotta understand: you want to scalp? Do you want to intraday trade? Do you want to swing trade? You know, if you want to trade this way, if you're just trying to look to trade within a certain session, like you're only trying to trade within, because you can't physically look at the chart between 9 to 5. So you're only trying to trade within, you know, the Asian session at night. You know what I'm saying? Like, you're only trying to look at that session, or trying to look like the, you know, whatever, you know, late Sydney, and the sessions during the middle of the night, whatever. Then you need to, like, test what you're looking for. You're realistically looking at intraday trade in that way, in between, like in those sessions. You know what I'm saying? So you have to cater your whole entire preparation around the idea that you're only looking to be within that session. You know, because that session you'll learn is going to move a certain way. You know, there's certain money coming into that market, you know, at those times. So, you know, what's the best
And
time?
also, you know, take pairs that are, you know, relative to the certain sessions that are open. So, you know, the London sessions, you know, usually middle of the night. Japanese sessions, Asian sessions usually middle of the night. Australian sessions usually middle of the night. In those time frames. So focus on those kind of pairs. So like, take a look at AU, take a look at AJ, you know, take a look at EJ, you know, pairs that are going to move, that have a good amount of volume during those times.
A good question for you also is, like, you know, can you trade during work? Like, is that a realistic, you know, opportunity for you? If you can't, maybe you traded before work, 6 to 9, whatever. For me, you know, that question is a little bit hard to answer, because since I swing trade, I just actively look for positions all day throughout the day. have my charts marked up. I have my watch list ready. If I'm not home, I'll just look on my phone real quick. I'll see where things are getting to. I could even pop on TradingView on my phone. Everything's marked up. And if I'm just waiting for literally an entry confirmation, that's the thing. You don't want to be analyzing on your phone or analyzing on the go in general. If you're getting ready to take an entry, it's fairly easy for you to just be on the go because you're literally just waiting for that confirmation for what you need to see to get in. Like, you don't need to really be all, uptight about it or whatever, or be too crazy about it. Are there trailing stops on the MT4 mobile app? I don't know. I don't personally use trailing stops. I've heard about people using them. I personally don't have the answer to that question, but that being said, I just want to end this session with anybody that is a beginner. Obviously we just went over a lot of questions here, a lot of things that, you definitely want to expand on. This is only the beginning for you guys. This is only the beginning, this session, only 1 hour long. There's so much more that we can get into on this topic. There's more sessions that we've done with this where we just rolled through 15 questions. You can check it out on our YouTube page. The questions like this will just be on the screen and we'll just be going through them so you can skip forward if there's any question in particular that you want, to look at. And if you're a beginner, just be patient. I always say this, start small, think big. And that applies to the positions me and Nick are in now. You got to have that same mindset, even if you've made progress, continue to think that you're in, the beginning stage, or you're in a, you're starting small. You always want to be in that starting position, so that way you can get, to bigger goals and you can continue to, make progress and just make gains.
Hell yeah. Oh, yeah. Absolutely. So, yeah, guys, thanks again for joining. Most of you guys stayed on for all this. Good amount of people. Hopefully we answered most of your questions. If not, jump into our Discord or, DM us directly.
Yeah, and we're about to get on to do a live trading session. So all you guys that want to, continue on, we're going to hop on. We're going to start to break down the charts and, get into it for this week, start to look at some positions. This has been recorded and will be uploaded to YouTube fairly shortly. So thanks again for staying on, and we'll catch you guys in the live trading session.
Let's get it.
Peace.